Hey, well, welcome to this week's Books Crypto Club catch-up on Zoom. It's Sunday, 31st January, and about to open the session up. No idea what we're going to talk about. It tends to be various things around cryptocurrencies, exchanges, wallets, smart contracts, development, whatever takes everyone's fancy, really. So let's see who's going to join us today. And if you enjoy watching this, then do remember to click on that subscribe button. Click the like and do whatever else it is that YouTubers keep asking you to do. So I hope you enjoyed today's session. Hello.
Good evening, Gary.
Hey, Chris. And hi, Nick. Nicely on time, Chris. Very, very keen.
Oh, yeah, I'm fascinated by it. So I'm looking forward to. There are a lot of topics to get through, but it's really exactly what I need.
Yeah, it is something that the more you learn about this stuff, the more you realise you don't know.
I'm spending quite a lot of time on it, and I just find that it's so much of it is geared towards people who are technologically aware.
Yep.
And it's I'm all for it being simplified so that people can actually understand what's going on. They assume that you know too much.
Yeah, but I think you're right. And it's been interesting as well. When I first got into this area 6-7 years ago, I started going to events. And what I found was that at most events, I probably didn't understand 90% of what they were talking about. And it took me a while to realize that, first of all, it was because it was something new and different. So fair enough, it's like a learning curve. And then half the time, it's because they were talking at too technical a level. And the other half of the time, it's because they didn't know what they were talking about either. And I always think that you can spot the people who know what they're talking about because they can explain it in such a simple way that you actually understand yourself.
Yes.
So that kind of comes down to it. So that's good. So we've got a couple more joining us as well. We've got Chris and Raj coming back. That's good. Oh. Nick, can you hear us at all? Let's see you've joined us.
He's on mute, I think.
He is at the moment.
Hey, yes, I can hear you guys. Thank you. Hope you're well.
Hey, good. Good to see you. Nice and on time as well. How are you keeping?
Yeah, good. Thank you.
And we've got Chris Held has joined us as well as our second Chris.
Yeah, hi. I'll try to start my video, but I've installed it on Arch, and the camera here is not the very best. Let me see what will happen.
No problem.
Meanwhile,
we've got Raj has joined us as well. Hey, we can see a picture of you now. You've got both Chris's together. Hey there.
Chris.
Hey. Hey, Chris.
Hi, Gary.
Hi, Raj. Good to see you join us. This is the first time you've been onto this session, isn't it? So you joined during the week. And we've got Mark Fernandez as well. Hey, Mark.
Hello, how you doing?
Hey, not so bad. Were you here last week, Mark?
Yes, I was here last week. Yep.
Cool. Okay. I get involved in so many Zoom calls and so many meetings. I struggle to work out at times who I know from which groups and this kind of thing. So that's good. But Rajesh, I should remember, because we have a common interest, don't we? Of the intersection of blockchain and insurance, which is
exactly
quite a niche area.
Sorry, Gary.
That we have a common interest in blockchain and insurance, if I remember. Yeah.
Exactly.
Which is quite a niche area, although Jonathan, who's about to join us, works for an insurance company at the moment as well. So
right. So quite a few insurance people here.
Well, it tends not to be. I think it's just by coincidence, really, that it just so happens we've got a few who are into insurance at the moment. Cool, Bill. Just let Jonathan, hi.
Hi, Gary.
I guess that means we've got enough to start talking about whatever we would like to talk about, really. We ended up with quite a long list of things. What we'll do, I'll just quickly read out what they are, And then I suggest that if anyone wants a particular thing they'd like to talk about first, or that they'd like to learn about, then we can do it from there, really. So we've got Ethereum, Bitcoin network speed, Lightning network, crypto news sites, crypto exchanges, Binance lending, BlockFi, risk evaluation, smart contracts, Lightning network, and crypto wallets. So is there any particular topic which is of a burning passion that anyone would either like to learn about or listen about or talk about, for that matter?
I'm happy to start at the top and work down.
All I can see there is a whole set of blank faces of it's like rabbits in the headlights.
So start at the top and work down.
We can do, sure. I mean,
Yep.
what do people want to know? Because someone wrote down they'd like to know something about Ethereum, but I wasn't quite sure exactly what it was they would like to know.
Do we know when Ethereum 2.0 is about to?
So
it keeps getting delayed.
Yeah, so Vitalik has learned that you never put dates against things. You always say something like, it is due shortly, and you never actually say how long shortly is. It's like that good project management practice that everything's going to be ready in 3 months, but you never say when the clock starts. So it's always going to be in 3 months' time. So I think Ethereum, certainly the move to proof of stake, I think has been well pushed back. The last I read, they were making some changes, some upgrades, but not to do actually what they're describing as Ethereum 2.0. I don't know, has anyone heard any difference?
No. But do you think that makes it easier for the competitors to move in on Ethereum?
I think that Ethereum right now has got a serious advantage, which is the ecosystem it's developed of a developer community. It's got to be the best developer community around the world, and that is what actually powers it. There are so many people who are now familiar with Solidity, which is the programming language that they use for the smart contracts. There are so many people who are familiar with EVM, so the Ethereum virtual machine. So it's just a platform that most people are most comfortable with. And when we were allowed to leave our houses and go to meetings and that kind of thing, the Ethereum community in London was pretty massive. You know, I used to go to Ethereum London each month or even each fortnight or whatever, and there would easily be 100, 200 people there at every meeting.
Really?
So it's quite sizable, and they are all highly knowledgeable people. Great bunch of people. And you know, this shows that what I love about the crypto community as well, it is still quite small. So I've been to a couple of events that Vitalik Buterin was at, and have actually had the opportunity to speak to him. There can't be that many opportunities with different technologies where you get to speak to people of that kind of level. So, so I think Ethereum, it's still got the biggest ecosystem in terms of a developer community. It's the most mature in terms of a platform. It's got a foundation in Switzerland providing the kind of like the rigor and support behind it. There will be other platforms though that come up. I think Neo was developing quite quickly for a while. EOS has kind of died away a bit, but there'll definitely be others. What do other people think?
I think Ethereum makes sense for decentralized apps. Where I have a problem with, well, not a problem, yeah, is I know that Cardano seems to be the better Ethereum, and for me now the question is, if they say we are the better Ethereum, and then you've got 3, 4, 5 people developing in all different languages, then how would you be able to transfer a Solidity program over to Cardano, and does it make sense? And how many people do we actually need that try to do the same thing?
Mm-hmm.
And how do you figure then out which one is actually the most future-proof?
So in terms of future-proofing, I'll offer an opinion to begin with like that, because it's almost like the VHS stroke Betamax stroke Philips 2000 thing that we had a few years ago with digital video and that. And I always say that the real success was not VHS Betamax or Philips 2000. The real success was the people who designed that SCART interface on the back of the TV set. That meant you could plug any of them in. So this is where the likes of Polkadot, which is an interoperability platform, may actually be the real leader in the future. Because what you're going to have is you're going to have people developing on different blockchain platforms, which are going to need to talk to each other. And so whoever develops the interoperability layer, I think is likely to be the real winner.
It comes back to who develops the shipping container.
Polkadot.
The danger is that there are so many silos, if you like, that all do their own thing, that all perhaps are very good within their own environment. But as you say, they just don't talk to each other. And then how does one talk to the other if a company uses one but has a supplier that uses another or something? How do those systems talk to each other? It's the age-old IT problem, isn't it? Of different companies doing different things, and even the early days of the internet. If somebody developed or had a website that you wanted to look at, if you weren't on the same internet provider, you couldn't actually see it.
So your analogy of the shipping container is a great one, because in actual fact, there isn't a single manufacturer of shipping containers, but the standard for shipping containers is fixed. So the fact they're all 40 foot, the fact that they've all got hard points in certain places makes them completely interoperable. So you look at the International Standards Organization, which is currently working on an ISO blockchain standard, the number of which escapes me. I think it might be 22839 or something. But there is an ISO committee who are actually developing a standard for blockchain and DLT. Now, once you've got that actually makes interoperability here anyway. And so maybe that's the future, that it'll be standards that mean it doesn't actually matter if it's Ethereum or Cardano. I was interested on the WhatsApp group a few days ago, someone was talking about, I think, smart contracts in the legal environment. And one of the things around that is that there's an organization called a call, which funnily enough is different short of the call, but is a legal smart contract consortia. We're doing standards for smart contracts, and they're building like an interoperability layer where you pull in smart contracts. It doesn't really matter so much what language or what platform they're on, although at the moment I think they're standard with Fabric. Anyone else got any thoughts on Ethereum? Because I think someone mentioned Cardano. That's definitely going to be a big competitor. And it's always worthwhile listening to Charles Hoskinson, who's the founder and chief techie on that kind of thing. He's a bright guy. Again, I've met him in London. He's a bright guy, but he's actually got a bit of common sense as well, which is quite unusual in this space.
Did he used to be involved in Ethereum?
He did. He was one of the...
It's one of the things I find very interesting about this space, regardless of the technology, is just how interconnected a certain group of people are, whether they're, work together but separately, or whether they actually fell out with each other and set up a rival. It's incredible.
I think it's always, you get either egos or philosophical differences. And this is where it gets really, really funny. So, I was at a conference in 2019 with Roger Ver, who's very much Bitcoin Cash, and Craig Wright, who's very much BSV, Bitcoin Society Vision, and Tony Vase, who's a Bitcoin maximalist. And they're all absolutely at each other's throats about how wrong the others are. It's like, guys, we're just talking about decentralized systems. It doesn't really matter what, whether it's a 1 megabyte block or a 2 megabyte block or whatever. Big deal. But they just get so wound up about it. They're such purists on it. So, whereas the rest of us are just going to go, yeah, whatever, 3-pin plug, positive, negative, neutral, plug it into the wall, it works.
Now, I would like to ask a question here, because especially with forks, And now that we spoke about Ethereum, I know the Cryptopia mentioned the DAO event where they actually rolled back the blockchain and that became Ethereum Classic. Now, my question, actually, I think it's a two-part question. One, why would anyone allow a rollback of a blockchain and basically get away with murder? And secondly, I had a chat with Roger Ver and he was like, Bitcoin Cash is the original Bitcoin. And I said, well, original Bitcoin is Bitcoin because that's the paper and that's how the protocol is supposed to work. And if you have a fork at some point, you basically clone the old blockchain, put your protocol on top, but you haven't really created anything dramatically new. So how can this be a new product? So forks is something that I've got a bit of my problem with. I think if somebody has got an idea, they can. I think the Bitcoin Cash fork was just an upgrade to Bitcoin or a different variation. But I think it's a bit of cheating when you take any random point in time and you say, oh yeah, this is what happened. And if you hold Bitcoin now, you've got Bitcoin Cash.
Okay, so I'll be happy to take that one and actually explain what forks are and what the difference is. Is that of interest to everybody? I see some nodding heads. Okay. So you think about what a blockchain ultimately is. It's actually made up of three things. It's a software protocol, so it's code. It's a ledger in some way that maintains data, and it's a method of securing that ledger, which is actually the blockchain level, which is where you have crypto mining, and that's where you get cryptocurrency coming into place. So you got those three pieces. You've got that, it's a piece of software which defines the protocol. And all the protocol is, it's a set of rules. So in Bitcoin's case, it's the rules that say a new block gets mined in 10 minutes, the block size is 1 megabyte, the difficulty factor of doing the calculation on the mining piece is at this level, and so on and so forth. Now, what happens with a fork is that Bitcoin, for example, it goes through review every so often by developers who are a voluntary community, and they get to review what are called BIPs, so the Bitcoin improvements proposals. So these are where people are basically saying, I've got this upgrade suggestion. I think it's really, really cool. And as an example, and we'll use the Bitcoin Cash one with Roger Ver, because it takes 10 minutes to mine a block of a certain size, that takes too long for you to use it as a payment, because you really don't want to be sitting around in a coffee shop waiting 10 minutes to get authorization or approval. So with Bitcoin Cash, someone came along with this proposal to say, well, why don't we make the block size? I think it was 2 megabytes or 8 megabytes or something. And that was it. It's basically change the code to make the block size bigger. Now, at that point, it goes through as a proposal, and that proposal, as in a software upgrade, gets applied out to the network. So all the miners, all the exchanges, and some of the wallet holders get to look at this upgrade proposal and either go, yeah, good idea, we'll have that, and they all embrace it, in which case you have what's called a soft fork. So a soft fork is just where the entire network is upgraded. So it's just like doing a software upgrade, nothing more, and everything is backward compatible. Okay, so there's no significant change, and it all works, and it's soft fork. There's nothing as in a new cryptocurrency or anything. It's just a network upgrade. Now, what can also happen is that you can load this software upgrade proposal through, and it doesn't get more than half of the entire network supporting it. So you get a fork, you get a divergence of some people saying they're happy with it, and some people saying they're not. And so what typically happens there is, as Chris alluded to, I think, you end up with a separate copy of the identical database. So you now got 2 copies of the database, both running at the same time. Up to that point in history, they're identical. But from that point onwards, 2 separate pieces of software are running to update those 2 ledgers. One with the upgrade, one without the upgrade, so the original, or what's normally known as the classic version. Now, one of them necessarily has to change what it is called. You can't have two Bitcoins. And that's why you've got Bitcoin and Bitcoin Cash, and you've got BSV, which is Bitcoin Satoshi Vision. So what you have is what's known as a hard fork, and a hard fork is where a software upgrade has been applied and it has resulted in a database forking into two and two different versions of software. And then from that point on, they continue in their different directions. The difference with a hard fork is it's not backward compatible. So you can't take a new block from your new blockchain and apply it to your old one. So I describe it a little bit like, if you know the history, I think it was in the 17 or 1800s at some school where they were all playing football one day and someone picked the ball up and started running with it. And that was called rugby. You know, and that was the origins of rugby. With rugby, the rules are different. So you can't go forwards and compare a rugby game to a football game. You know, the point scoring system is different, the protocol is different. It's not backward compatible, okay? If, however, you change something in football, say the offside rule, so you're still getting 3 points for a win, 2 points for a draw, or whatever it is, but it's just an upgrade to the protocol within the game, and the game is backward compatible, and that's a soft fork. Does that make sense to everybody? Yeah.
Yeah.
So that's all it is. You've got a hard fork is where you've got a split and it's not backward compatible. And you have two separate database instances now, so two separate ledgers. And so with cryptocurrency, you have Bitcoin, which is that one there, and wherever BCH is or whatever. And this is how a lot of cryptocurrencies come into being. So a lot of these cryptocurrencies are actually the Bitcoin protocol that's been forked. And they've just made some coding changes to it because they think there's some neat ideas they can incorporate in it, but it's not backward compatible. So this is how you end up with over 2,000 cryptocurrencies. People aren't all coding them completely from scratch. Usually they're saying, oh, I'll take a look at the Dash code base and I'll borrow that and I'll make some changes to it. I'll spin that up and I'll call that Monero. But, you know, by way of example, that's not what actually happened with that one. And that's how you get new cryptocurrencies coming into being. That makes sense to everyone? Does that answer the question?
Yes, it does. Thank you, Gary.
Yep.
Can I ask the next question, which probably ties in nicely about the Lightning Network?
Yeah. As in, what is the Lightning Network?
Yeah.
Okay.
And will it fail in the future?
So it's kind of funny because the Lightning Network is a technology solution to solving a Bitcoin problem by avoiding Bitcoin. So the way it works, if you think about how Bitcoin works, first of all, is that every 10 minutes, a new block of transactions is mined. The miner is rewarded 6 Bitcoin or whatever, and all the transactions then immutably applied to that block, and then it goes down in history and so on. So the problem is, as I mentioned before, that a new block is mined every 10 minutes. And that's actually built into the protocol. It's intended to be that slow because it gives it an opportunity for security in there. But if you're in Starbucks and you're buying a cup of coffee, you don't want to be standing there waiting for your funds to clear in 10 minutes time. Particularly not because actually there's the potential that that particular block could actually get rolled back, which can potentially happen in some way if there's some conflicts across the network. So you actually have to wait for what are known as several confirmations. So that basically means to be confident that your transaction has taken place and is not going to get rolled back, it's probably going to take about an hour or so. So you've got 6 confirmations if it goes through. So what the Lightning Network does is, rather than it saying, right, Gary is paying Chris 1 Bitcoin, it actually says Gary is putting 1 Bitcoin into another fund called escrow or something. And then you and I offline trade around with that escrow amount where we can swap coins between us with an agreement that at any point that either of us want to, that current balance on that separate escrow account, which isn't on the blockchain, the data of how much of Bitcoin you own and how much Bitcoin I own, At that point in time, if either of us wanted to, it gets written back to the blockchain straight away. So what that means, it's like you and I keeping a little database between us about I owe you, you owe me, blah, 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 blah. So it's instant. It happens instantaneously. So it's actually an off-network transaction. And it's only at the point at which we want it back onto the blockchain that it gets written there. So it overcomes this 10-minute problem. So effectively, it's a way of making a blockchain faster by not using a blockchain. It's kind of ironic that you're actually just using a database. And all it is that at the point at which you go onto the Lightning Network, you create an entry in the Bitcoin ledger to say that Gary's escrow account's got 1 Bitcoin and Chris's has got 0. So when you look on the blockchain, it'll say Gary's escrow account has got 1, Chris got 0. Then we'll go off and dabble off chain. And then the point at which we want it back on, that's when it gets written back. So that just makes it very fast. Is that in agreement? John, I can see you kind of...
Who decides or what decides when it gets written back to the blockchain?
So the way it's done is with, I think it uses what's known as multi-key, that as long as one of you decides, then it goes. So it can be one of you decides to write it back to the blockchain, or both of you can. It's just at that point, either of you can. So it's a little bit like, do you remember with bank accounts, how you used to have authorized signatories? And you needed any 2 of 3 of a company to sign it or something? It's the same with this protocol. As I understand it, it's if either of you want it to be written back at that point.
So what would happen if one wanted it written back and the other didn't?
Then it gets written back.
Right.
That's the whole thing there. And that's why both of you will trust it on the basis that you know at any point, either of you can write it back.
And it's only between 2 parties. It's not a sort of...
So this is where it gets more complex, because what you would effectively have to do is, if I went into Starbucks, I'd have to have an escrow account, and Starbucks would need to have an escrow account, and we'd have to do the dabbling between those. And that's not always very efficient. So what you can do is someone can set up an escrow account, everyone agrees to use that, with the agreement that then gets written back to the blockchain. So you can have multi-party type thing. But to me, it's kind of a kludge, the Lightning Network, because it's actually doing blockchain transactions, but not on a blockchain. So it's almost saying, oh, blockchain, new super thing with cryptocurrency is fantastic, but now we're not actually going to use it for that. Dean might have a view on it. Dean, hello, good evening. We're just talking about Bitcoin and Lightning. Well, that's confusing. He's still setting his camera up so he looks lovely. Any other questions on Lightning Network? That's a very simplified version of how it works.
Thank you.
Ultimately, it's just you take it off the blockchain, you do the transactions directly, and then you write the results of the transactions back to the blockchain. So you do it because it means it's instantaneous.
This may seem a very silly question, but Ethereum, that isn't a fork of Bitcoin. That's or is it?
It may have been originally.
It's sufficiently different now that, yeah. Right.
Yeah. Likewise, I think Cardano or ADA was originally a fork of Ethereum, and then they modified it quite significantly. Yeah. Ian, can you hear us okay? Oh, I'm going to be seasick looking.
Sorry, Gary, just about.
Good evening. Welcome to the party. Oh, Chris, going back to the DAO, by the way, because you mentioned about rolling back.
Yes.
A really good point. For those who don't know, the DAO was a project in 2017, 2018, I think it was, of the first attempt of what was known as a DAO, a decentralized autonomous organization. So the idea was that they would have a smart contract running that basically controlled everything that related to, I think it was allocation of assets, so developers and that kind of thing. And at the time when it was written, it was just quite a complex smart contract, but there was a feature in it, and I'm refusing to call it a bug, it was just the way it was written, which meant it was exploitable. And the way the exploit worked, if I understand correctly, it's a little bit like going to a bank machine and putting your card in and asking to take £100 out. And the machine checks to make sure you've got £100 and then says, yeah, you've got £100 and gives you the £100. And then you're saying, I'd like another £100. And this time it doesn't check that you've got the funds because it's already done a check for £100. So it gives you another £100. And they say, "Oh, that's nice. I'll have another £100, please," and so on and so on. So it didn't keep going back to check if you still had the funds. And so what happened was that someone noticed this feature in the code and thought, "Oh, that's a nice exploit." And they went off and they ran this thing and they basically started siphoning funds out. So the DAO was a project that had raised, I think it was $150 million, and someone siphoned out about $50 million of it before it was stopped. Now, go to Chris's point about what then happened with the rollback is, as you'll all know, blockchains are immutable, they're right-only, they can't be reversed, except they can if everyone agrees to it. And this is what happened, that the Ethereum community got together and said, well, we can either accept what's happened and this hacker, in effect, has got away with $50 million, or we can modify the protocol to say that the address that this all went to is blocked, which is certainly a valid thing to do. And they could have done that with just a soft fork. They could have written in a little instruction in the protocol to say anything going to this address is null and valid. But the people who had put the money in would not then be able to access their funds. And so what they did was they effectively modified the protocol and rolled back the database back to the point just before where this exploit took place. So they did rewrite the history, and I think it was absolutely awful that they did. But they did it in the belief that it was protecting the funds of people who put money in, and so for the community, it was the right thing to do. In hindsight, that decision caused them a real load of pain. And you know, my belief is that they should have accepted it, and they should have accepted that people had lost their funds, because that's the nature of things, and we'll learn when a bit of blood spilled. So, Chris, just going back to your point, that's what happened with Ethereum when DAO rolled. So, go on, Mark.
Yeah, it's quite interesting that you mentioned that they went back to the community. Who would they define as the community? So say, for example, if I've got one Satoshi, for example, am I a member of the community, or do I have to be signed up to something in particular?
Yeah, so you've got multiple layers with Ethereum. You've got the Ethereum Foundation, which is a Swiss entity that's been set up to provide support to the overall infrastructure and development. And they're the people who tend to fund, as I understand it, developments and enhancements. You've got part of the community is things like the exchanges and the miners, because they can make decisions as well. But I believe that this was almost like an executive decision, which is quite funny for a decentralized organization to have an executive, where I think some of the senior people who are well known in the space, so the likes of Vitalik Buterin, who's one of the founders, actually made the decision. And I think they put it to a vote in some way, but I'm not sure how the voting worked as to who managed to get a vote. But in terms of whether you've got Satoshi and whether that makes you a member of that community or not, I've got pound notes, but that doesn't give me a right to decide what the Bank of England's going to do. And it's the same with crypto, that if I own Satoshis or Ether or Ethereum, that doesn't give me a right to vote in its future. But the developer community and those who are effectively responsible for its governance do have that.
Because I think that's the difference with Swissborg project, where they are, if you hold CHSB, then you are effectively a member of the community, and then you are able to vote.
Yep.
Isn't that right? Yeah.
So that's kind of, that's a little bit almost like proof of stake as well, In fact, it's kind of an extension of that. That it's not only can you prove that you've got an investment in it, but the amount of influence that you have relates to how much you've got invested in it. Yeah, it's a good bunch of people with Swissborg as well, actually. I know there are a couple of people based in London these days. So did that answer everyone's questions around Lightning, Ethereum, forking, the DAO, rolling back? We've covered 5 things already. Who's got anything else?
Yeah, I've got a question about Litecoin itself. What do people see as being the future of Litecoin in relation to Bitcoin itself?
I guess you need to speak to the people who own some in some way. Litecoin, again, is a variation of Bitcoin. It's just that it's much, much faster. And because it's much faster, it makes it more suitable for trade, for buying and selling. So, I mean, Dean's probably someone who may have a view on that, because Dean's kind of like Bitcoin Cash Roger the maximalist, a true believer. Dean, care to offer any thoughts on that?
Freedom's the answer. What's the question?
What was it? Freedom?
Freedom.
So you see that there's a future in it, and you know, the idea that it is the silver to the gold kind of thing. It's absolutely true, and there will always be a need for it.
Absolutely. I mean, does anyone here spend Bitcoin? Do they use sidechains or anything? No.
No one spends Bitcoin. We buy it and we keep it. We hold on to it.
Yeah.
And hold it.
Yeah, all hodlers here.
The problem is that I mean, I'm a holder of Bitcoin as well as Bitcoin Cash. It's just that it's great at the moment because it's digital gold, and it's obviously been used to buy Blockstream. You know, 5 years ago, 6 years ago, I could walk into Starbucks, transfer Bitcoin from my wallet directly into my Starbucks app while I was in the queue. Now, if I'd done the same thing, I'd have to be there 2.5 days. So what's gone wrong? What's happened?
And I think that's the thing, though, because people quite often say, well, why do you need more than one cryptocurrency? Yeah. And the reality is that it's funny because quite often the people who ask me these kind of questions are from the fiat world, so the traditional finance world. And you say, well, why do you need 176 fiat currencies? You know, you've got the pound, the dollar, the euro, the yen, renminbi, all this kind of stuff. And it's the same with crypto. You know, the reason we've got all these different things is because some of them behave differently. So you've got some that are privacy coins, you've got some that are optimized, being really, really fast. You've got some which basically follow the original protocol and are fixed on that. It's just whichever is your preference. And with Litecoin, I think Litecoin, that they said that that's a cryptocurrency that's for buying and selling things. It's designed for transactions. So
exactly, Gary. I agree with you. I mean, you know, Bitcoin was cash for the 21st century. What went wrong?
Although some would argue nothing went wrong. It's all just a grand experiment.
Well, the issue is exactly, but the issue is that we are no further on in the cryptocurrency world with regards to Bitcoin. I mean, it is the Model T Ford of crypto, isn't it? I mean, if we owned a Model T now, we'd all make a hell of a lot of money, but no one would want to drive around. No one wants to use a Model T. And that's the same as Bitcoin. This is why Bitcoin Cash is the future, or any other cryptocurrency that's going to work.
That's often the case with any sort of new technology. You know, whoever creates it has a vision or an idea that it's going to become one thing, and then gradually, for whatever reason,
Jonathan, but
whatever you want to call it, decides that no, it's actually not.
Yeah, the issue is that because it got taken over by, shall we say, our outside interests, you know, 5-6 years ago, I could use Bitcoin instantly. Now I can't spend it. The only thing I can do in my Bitcoin is just hope that the price goes up. That is not we're into Chris.
That's what it's
that's not
becoming,
what
though,
we're
isn't
into
it?
cryptocurrencies for, are we? We're into cryptocurrencies for to move along from the banks and move along from the status quo. And I understand some people are just interested in making money. I'm a big fan of making money myself. Don't get me wrong, but this is why there's such a strong use case for Bitcoin Cash, because it actually works. And I would say I'll make a prediction, within the next 3 to 4 years, it will overtake Bitcoin because of the fungibility and use. Gary, even you were quite shocked. Remember when I zapped over Bitcoin and we played Bitcoin Cash tennis between us?
Yep.
Gary, even you were quite surprised, weren't you, at how instantaneous and fast it is? And these small blockers for people that believe in small blocks, the Luddites. I mean, they were the people that were smashing the printing presses. That it was an awful thing. At the end of the day, a currency or a transfer of value has to be fungible. There's got to be fungibility there. And there's a lot of people that knock Roger there in the Bitcoin or in the cryptocurrency space, but this is a man who puts his money where his mouth is and puts an incredible amount of money to good causes, as in Julian Assange. I know he's made a considerable contribution to Ross Ulbricht, the founder of the Silk Road. This is someone that talks the talk and walks the walk. It's just not someone that's in this to make a fast buck. He actually wants to make Bitcoin what it should have been, which has been taken over by, shall we say, the banking cartel via Blockstream. And those that can't see that are effectively turkeys voting for Christmas.
What is Blockstream?
Blockstream was the company that basically Gavin Andreessen, that was the lead. Gary, you'll know all about this. Gavin Andreessen, that was the lead programmer of Bitcoin, who directly had emails from Satoshi, as in developing Bitcoin, moving it forward. When Blockstream came in, apparently he wasn't good enough. Apparently he didn't have the skills. So Blockstream are a French company, are owned by AXA, the insurance giant. So obviously they are very much into the old world banking system. And what we've got to do, as in those that are into cryptocurrency, that want to see our investment, take off, is it's all very well sitting on Bitcoin, but we've got to start using cryptocurrency. Cryptocurrency's got to be spent. It's got to be a demand. And if I stood in Starbucks now in a queue, I'd have to wait 2.5 days for that transfer to occur. What's gone wrong? Well, so we know what's gone wrong. It's deliberately been.
Well, coming back to Jonathan's point about Blockstream, and this is why I thought the film I watched the other night, Cryptopia, was really good, because it mentioned Blockstream. Blockstream is effectively a leading Bitcoin development company that was involved. Some of their people were in the original Bitcoin development, and now they do investments, they do developments on some other things as well. So it goes back to, I think, as we said right at the beginning almost, you do sometimes get not just software and hardware forks, but you get personality forks, where you have fallings out and disagreements and all this kind of thing. And sometimes that can be the cause, either because of a different philosophy or a different motivational driver. As Dean says, the original principle behind Bitcoin was the ability to use it to buy and sell things, whereas now Bitcoin tends to be viewed by most people as an investment vehicle, as a way of making money. Now, I always think that you just have to accept that people use stuff the way they want to use it. So if some people want to go and buy some Bitcoin in order to see the numbers increase, that's up to them. If someone want to use it to go and buy and sell things, that's up to them. But yeah, so
would we say as soon as companies, big companies, corporations put a cryptocurrency on their asset list, that's almost the end of that transactional use case for that crypto?
No, I think that's just the beginning of it.
Right.
So we've already seen that with likes of MicroStrategy,
yeah,
who are a business intelligence company, who has got a hedging strategy, very, very brave, shall we say. Basically said, well, our current reserves are held in US dollars. The value of the dollar is increasing. We want to protect ourselves against that, so we're going to put some of our funding into stuff that doesn't devalue so much. So they've actually bought into Bitcoin in a big way, which was a massive gamble that has paid off handsomely, because the price of the Bitcoin they bought has doubled and trebled. So the chief finance officer or whatever who signed off on that must be very, very happy indeed. But there's no reason why companies couldn't, buy Bitcoin and Ethereum and Litecoin and whatever else. And you may well see that eventually, that finance companies tend to use a lot of portfolio theory for diversification. And so for them to hold crypto at the moment, that only represents a very small portion of their assets under management. Now, as that grows, they're going to be required to split that into different assets. If it ends up that 30% of their assets are in crypto, they will not be allowed to hold 30% just in Bitcoin. They usually have all sorts of limits as to what they can and can't hold and that'll be too much exposure. So I actually think that you'll see it with companies move into Bitcoin initially, and then as their holding changes and their strategy changes to get more comfortable, they'll start getting other things as well. Note that none of this is financial advice. So, any other thoughts from anybody? Any other questions? Raj, you're new to the group. Do you want to explain who you are? Tell us a little bit about you.
Right. Hello, friends. My name is Raj. I came across Gary's video of Lloyd's coffee shop insurance in London last week, and quite impressed with what Gary's doing. So I contacted Gary. So Gary put me in this group. Here I am now meeting you, all of you guys. I'm very new to this field. I am in the insurance field for quite some time. I'm a software professional working for WPP in central London. Mm-hmm. I'm not sure if you've heard of it. It's a marketing ad agency, where I'm a database manager supporting Ford's fleet and retail businesses. Since 2017, I'm quite impressed with blockchain technologies. I wanted to know more about blockchain. I did read about shared ledger, all these theoretical books and stuff like that. Never done any Bitcoin transaction. I don't have any Bitcoin. I'm not interested in this Bitcoin thing. But I hear a lot of people talking about Bitcoin and the underlying technologies, the blockchain and the shared ledger. And being a part-time insurance protection advisor, I know this, the new technology, the shared ledger technology, smart contract, is also applied in insurance sectors. So wanted to know more about it and see if I can use it in my profession, or maybe I can make changes wherever possible.
Okay, so I've done a fair amount of work in this space, both with insurance, with blockchain, with distributed ledgers, and with smart contracts. So for those who don't know, there's an example of a smart contract being used in insurance, which is with flight delay insurance. And it was tried by an insurance company, in fact, which was AXA, I think. Funny Dean should mention that. that they launched a product called Fizzy, and Fizzy was a flight delay insurance project that used a smart contract that basically, if your flight was delayed, you were automatically paid out. And they ran Fizzy for, I think it's just over 12 months, but they've wound it down now. They stopped it and they said that basically it was an interesting experiment, but they've not had enough business through it. However, there is another company who I was doing some advisory work for a while ago called, oh, it's gone away. An Austrian company whose name escapes me now, who did a flight delay thing, which they're still doing. So basically, if you go on a flight, you take out this protection, and they have to be very careful about what they call it because it's not necessarily insurance. That is effectively a bet that your flight will operate on time, and it goes off and it automatically checks to see if your flight operated, and if so, was it delayed or anything. And if it was delayed, you automatically get paid through the smart contract. And I'm annoyed now that I can't remember their name because I did a fair amount of work with them. They're a great team. Talk amongst yourselves for a moment, so I'll just go and find that one out. Anyone got any other thoughts or questions or anything?
Yes, Gary, I'd like to ask, has anyone heard of Cash Fusion and what the Cash Fusion is going to be and what a game changer it's going to be for Bitcoin Cash?
That sounds like a good one for you to come on stage and tell us all about it, Dean.
Okay, well, George's due to be launched, boys and girls, this year. Is a payment layer or a protocol called Cash Fusion, and Cash Fusion is basically going to basically make Bitcoin Cash. I think it can probably be used on other cryptos, but I know that they're launching it on Bitcoin Cash, where effectively the permutations are as vast as the stars in the galaxy. So it's going to make darker than the most dark coins out there. So that's going to take away some of the uniqueness of Zcash or any other of the dark coins. So it's quite an exciting development, I think, because again, I think it's going to make the coin even more user-friendly and for privacy and to spend your money with it not being anybody's business.
So is it basically,
which is what it should be.
It's a next generation privacy coin?
Yes.
Okay.
Yes. And again, this is a development that's been, I know it's been available in the desktop version from bitcoin.com, but it's being integrated into the wallet, I think, within the next few weeks. I think it's going to be an absolute game changer, Gary, because, you know, with the speed, which is instantaneous, and obviously then you've got this privacy aspect that cannot be cracked. I think it's just going to be a winner, an absolute winner. So I'm quite excited about it. So I'm really looking forward to getting my hands on it.
And I presume from what you're describing, where you're saying, you know, there's more combinations than atoms in the universe or whatever, which, but funny, I get to hear that with several projects these days.
Yeah, exactly. Exactly.
I'm assuming that's using like a DAG rather than a blockchain database, do you know?
I don't know, Gary, but again, we've had conversations about there are companies that are employed, cryptocurrency companies that are employed to trace people's crypto, which is very, very worrying. They work for whichever alphabet agency you care to mention. So because of course the conversations we've had is that Bitcoin is extremely traceable, and you know, so this is going to be quite an exciting development, I think, because it's going to make it even more private than spending cash itself, than old-fashioned cash.
It's probably one worth mentioning to everybody as well, where we're talking about privacy coins. So these are cryptocurrencies that are designed to intentionally hide who the transactions are between and what the transactions are, and that is that a lot of people are getting quite excited about them because the capability is improving. just at the same point at which they're getting delisted from a lot of exchanges. So it may end up that you've got a situation whereby privacy coins really will end up being the black horse of crypto, because they will be associated with dodgy dealings, because they'll have, correctly or not, this whole thing of, oh, well, we can't do KYC, AML, or any of the other checks that finance companies do. And so recently, several exchanges have started delisting, I think in particular Zcash and Monero.
Yeah.
I think they're doing that because they're concerned with a potential reputation risk. If they're still trading in those things, it could expose them to prosecution in some way. And so they're just stepping away from it. So,
And Cash Fusion, by the way, Gary, is going to be switchable. You can turn it on or off.
okay.
Who are the people behind Cash Fusion? I mean, are they an actual company? And if so, which country? And therefore, the regulators of that country, are they going to shut that company down?
As far as I know, Jonathan, they're employed by Bitcoin.com, which is Roger Ver's company.
Okay, all right.
So this is something I think that they've picked up from another coin, and they've just amplified it.
That's always the thing. I mean, I like the philosophical idea of it's your money, do what you like with it, is nobody else's concern.
Yeah.
The reality of the world, I think, is slightly different in terms of governments and regulators. And I do wonder how long these sort of things can keep going, or how often they have to be reinvented to avoid regulators.
We've already got these decentralized exchanges, Jonathan, so it's already here. So my understanding is Janet Yellen, that has now been appointed by Biden, that her first job is to sort out the cryptocurrency issue. That'd be interesting.
I do think that the challenge is going to be that sometimes sorting out doesn't necessarily mean putting in place a framework that allows it to be used. It can sometimes be as simple as make it as hard as possible to use. I know India is probably a good comparison at the moment, where India over the last couple of years, RBI, who's the World Bank of India, so that's like the equivalent of the FCA, they've been kind of on the fence a little bit about cryptocurrency, and they've been sometimes supportive, sometimes anti. Then Supreme Court in India made a ruling recently that actually meant that crypto wasn't illegal. So a load of people then said, oh, great, we can start using crypto in India. And now it looks like RBI might be drafting a bill that makes non-state-owned cryptocurrency illegal, which we've kind of gone around in full circles there. So yeah, if Yellen's been given the mandate of sort out crypto, having seen some of the regs that have been coming out of the States lately, that may not be a good thing if you're a US citizen and want to use crypto. We'll see.
I think there's going to be quite an epidemic of people losing their traders in boating accidents.
Yeah, could be that.
Don't you, Gary?
I think you could be right.
That seems to be, it's a phenomenon actually, isn't it? People losing their traders in tragic circumstances. Again, this is the thing, is that, permissionless money has got to be the way forward. Again, with the, what's happening with the GameStop, and I know this is, it's not a cryptocurrency issue, but those that ever thought this is not a rigged game are just deluded. They're deluded.
I actually think what's happened with GameStop and Wall Street Bets is very, very relevant to crypto, because it is the philosophical question of
that's right.
Who controls.
That's right, but the issue is, Jonathan, is that the joke is now is that these asset stripping traders and hedge funds are now running to big daddy government, asking for them to, this is not fair, this is not fair. Can you stop this? Can you stop this? Well, of course, this is what they spend their whole careers doing, ripping companies to pieces. And on the upturn or the downturn. And you know, this is the problem that we've got, is that it always saddens me when you hear people that are into cryptocurrency, they're always looking for permission.
There is actually a crypto connection with this as well. I don't know for any of you use CoinMarketCap. For the last for the last few days, the number1 crypto is Wall Street Bets.
Wall Street Bets, yeah.
It shows it gained 1,100% in 24 hours.
Yeah.
It shows it going up like this. I looked at it and thought, where did that come from? You know, it was above the trading of Bitcoin and everything.
Isn't it listed as Coin Zero? It's not even #1, it's Coin Zero or something.
That's right, and so you click on it, and it says, actually, this is a bit of fun. It's just trying to get back. And if you ever see any crypto coin that is called something like Wall Street Bets, then don't fall for it. But
I mean, you know, this is a historical thing, Gary. You know, we had the interbank lending rate, the LIBOR. What a great name that was. You know, the word lie gives it away.
Yeah,
you know,
I just read the book on that, actually, about that whole scandal.
Yeah.
Really interesting.
It's fascinating. It's fascinating, Jonathan. And the problem is that when you get a cabal of people, a group of people that have a financial interest in moving a product from one place to the other, and they take their commission when they move from one point to the other, then clearly this is going, you know, when are people actually going to get to grips with a program that permissionless money and money that is actually attached to the free market, where there is no one central control, there is no one central decider, you know. And again, this is the thing that pains me with Bitcoin, the way it has been neutered, the way it has been, you know, if Bitcoin was allowed to develop with bigger blocks by now, Bitcoin would be 150, 200,000 pounds. You know, it is.
Dean, sorry,
yeah.
I'm just conscious of the time because we've just run over the hour. At the moment.
Okay, we've gone over. Yes, 2 minutes past.
Try and keep this to an hour. So
yeah, I joined late, Gary. I had trouble getting on actually. I had trouble joining.
No problem. Just a quick note from me. Thank you everyone for coming along this evening. Sorry that we didn't cover everything. We never do, because we always end up talking about some other interesting stuff. But I hope for everyone who did come along, you got something useful out of it, maybe learned something or got some ideas. Do add into the WhatsApp group if there are any other things that you'd like to talk about or learn about, where I can either help or I can point you in the direction, or other members in the group can help on it as well. It is a community. It's the whole thing that we created it originally to help support each other. So thank you very much. See you next week.
Thank you, Gary.
Bye.
Bye-bye, guys.
Bye-bye.
Bye-bye.